somewhat decent, but I didn't know. Okay, share screen.
Makes me sad most of the people here don't know what's
I switched to Observer.
Is that one movie? But
Share. I didn't do this last time I made a video. It didn't share my screen. There we go. Okay, partner bonuses. What a partner bonus is if you have like a new partner getting into a partnership, and there is a difference between the amount the partner's paying to get in and the amount of equity they're getting. The bonus could be to the existing partners, or it could be for the new partner. Why would they do that? And I may have already discussed this with y'all. Did I talk to y'all about the sports medicine example?
yes.
Okay. So if you've got a business that's really growing and thriving and somebody really wants to get in, they may pay more for it than they're going to get in equity, and vice versa. If you've got somebody with a skill that's valuable, they may allow that person more equity than they charge them for, essentially. So that's what bonuses are. So a new partner may pay existing partners a bonus to join. Ownership interest received by the new partner, if they're the ones paying the bonus, is going to be their ownership interest is less than what they're paying. So if there is a bonus to the existing partners, then it will be distributed based on the income sharing ratio. So are y'all trying to write these? Okay. Let me know if I need to go back down. And then there's some info about a withdrawal of a partner. Partner may retire or withdrawal. They may sell their interest to the existing partners, or the partnership may buy their interest. But regardless, before anything like that happens, a new partner coming in, an existing partner leaving, we always have to adjust the assets to current values. Okay, and then down here at the bottom, it's just kind of a recap of how you determine who's getting the bonus and how you figure out what the bonus is. And no good? All right, so let's look at how we figure out the bonus. If there is a bonus, what is the bonus? All that kind of stuff. All right. So we have this example here. We have Ellen Peters and Marilyn Johnson, and they have a partnership. They share profits and losses equally. So, you know, that's something you're going to want to pay attention to when you're reading the problem. They're thinking about adding this new partner, Kevin Smith. That was not intentional. That's funny. I just realized I did this thing a long time ago, but they're going to let Kevin into their partnership. All right. So when he's going to pay $41,000 to get into the partnership, I skipped something. Okay. So they have already adjusted the assets. So we're not going to do that piece on this problem. So you don't have to worry about that. I mean, if you don't see the numbers given there, you can't do it anyway. So you'll know you can worry about it. I'm blowing up on one. So they give you the capital balances of the existing partners before the new partner comes in. They tell you that the new partner is going to pay $41,000 to get in, and he's going to get 1/3 of the equity. Okay. So we're trying to figure out, is there a bonus? How much is it? And who is getting it? My little arrows, when I changed the font, did not go to the right place. So I disregard, and I'll show you what this is supposed to be. This number here goes here. So sorry. All right. So this is just a worksheet, steps I came up with for you to go through to figure it out. If this confuses you, you can do it however you want to. What you got to do first is figure out, once the new partner comes in, what will the total equity of the partnership be? So how much money is the new partner bringing in? That's going to be equity, regardless of whether it's all his or not. If he was putting in 41 and getting 41, we debit cash credit his equity, right? So it's going to be equity. It's going to be capital, right? Okay. So Ellen Peters, $30,000. We saw that up at the top. This is where I'm getting that from. Here. That's Peters capital. Johnson capital is 34. And I'm just calling this capital contribution because that's not his capital amount yet. We're trying to calculate that. He's putting in 41,000. All right, so my total equity, including his contribution, is how much? 105. All right, so we're going to bring that 105 down here, so ignore these arrows. All right, so the next thing we'll do is apply the percentage to total equity. So the total equity is 105. We just figured that out. What percentage is he buying?
1/3.
1/3. So what's 1/3 of 105?
35.
All right. So now we're going to compare how much is he paying, how much is he getting. All right, so he's paying 41. He's getting 35. So who's getting the bonus? It's not him. The existing partners are getting that bonus because he's paying more than he's getting. So the existing partners are the ones that get the bonus. So next thing we're going to do is journalize the entry to show him joining the partnership. All right, so what do you think we put down first besides the date? I mean, my suggestion is if you kind of go completely brain dead on this when you're on the test, I mean, there are some names. Like, for instance, how much is he paying for this? How much is he paying for this interest?
41,000.
I mean, so you've got cash, 41,000. I mean, you'll get credit for that one little piece if that's all you can remember. And that's kind of a given. You've got that information given to you if you completely forget how to calculate the rest of it. I mean, honestly, you could list the other 3 equity accounts and at least get partial credit, you know? All right, so I've been kind of skipping to the 4th line because I know that his the new partner's equity is going to be credited because he's buying in and he's getting an equity share. If you're not sure which way debit or credit the bonus is going to go, especially for Cengage, so that you're not
You're just crediting
having to
someone else.
move everything around, we're going to credit him for the amount that we just calculated. So he's getting 35. So that's the whole point of that exercise, is to figure out how much he's getting and then also to determine the bonus. So we got a bonus of 6,000.
So you credit both of the other accounts for 3,000.
We do. Because the problem said that they share profit and loss equally. So now once all this is finished, they'll, you know, distribute it differently. But when they're adding him to the partnership, nope, it's not right. So give them each 3. Y'all good with that one?
Yep.
Are y'all practicing today? Surely you are. You'll practice every day, don't you?
We have weights and we're taking pictures.
I have some other students, or at least one coming at 1 for that homework. Or help with that. Are you raising your hand?
No, sorry.
Okay.
KD, yeah, you told me.
Okay. So, I mean, if you want to come down, you can. Or if you got it, you're whatever.
I mean, I did it. Guessing sometimes I did it. I would go.
You understand that though? I'm gonna give y'all practice problems to study with, and I'll have the answers in the module. But you can also, I'll give them to you next Tuesday, along with the quiz. You've got these to study by, and so if you need help when you work through those study problems, if we have time, we'll start them in class. It just depends on how we end up. Okay.
Is our test next week?
Thursday.
Okay.
Along with who else has got one on Thursday? Him? Y'all have him this lesson?
I do.
No. Mr. Mark.
Oh, yeah.
Is he have a test on Thursday?
I don't know.
We always end up doing that, and it's not intentional.
I didn't do it on intention.
No. I'll ask him at the beginning of the semester, when are your tests going to be? Ooh, I don't know. And we'll always end up having them on the same day. Oops, sorry. But you know, then again, you get them all over with. All right, so,
They're almost.
oh, they go quick for you. In this example, we're going
Yeah,
to,
for you.
we're going to see what it looks like for the new partner to have the bonus. I'm going to make all y'all need to print it.
It's the same thing though, right? It's just, you're just adding it to this.
Yeah, it just goes backwards. You're going to go through the same process. Jamie Evans, Larry Franco have a partnership. They are considering adding a new person to the business. Currently, the partners allocate profits and losses on a 2-to-1 ratio. So I tell you there, I've already figured it out for you. Evans gets 2/3, Franco gets 1/3. Partnership assets have already been adjusted. There's nothing to do there. So here are the capital balances after that adjustment. So they're going to admit Nathan Lewis for $40,000. He's going to pay $40,000 to get in, and he's going to get a quarter equity, 25%. All right, so we've got to figure out. Okay, first, what's total equity? You're not going to have these charts on the test, so and you're not having for homework either. You're just going to have to follow this.
150,000. You wrote it down for us.
Oh, I did. Yeah, for them, but when you add the
Oh yeah. when you add
contribution in
this,
there.
190. Right.
So we've got 90, the existing partners, 90 and 60, and then we're going to add in Lewis's contribution. So we've got 190, right? All right, so that's going to be our total equity once he puts that money in. All right, so bring this number here, 190. What's his equity share?
1/4.
1/4 or 25%, whichever one you want to work with. All right, so how much capital is he going to get?
47.5.
Okay. Joe, tracking so far? All right, so now we're going to look at what he's paying versus what he's getting. So he's paying 40. He's getting 47.5. So we've got a $7,500 bonus. And who's getting it?
Yes.
He is. All right, so journal entry. What's the first thing you're going to put down?
I don't know. Can you go?
Yeah.
If you don't mind.
Do not know. Is that right there?
Yes. Good.
And you're right, cash first. If you can't remember anything else, you know how much he's paying for it because it's in the problem. All right.
So you're going to debit the other two partners' capital.
Yeah, since the other two partners are paying the bonus for this new guy, they're going to have to give up some of their capital to get him in there. They're essentially giving him some of their capital. So we will credit Lewis capital. You don't have to skip spaces. I'm just doing this for the sake of Cengage. So we know his capital is going to be 47.5. You know you're going to have a debit to make your entry work out. So you've got Evans capital, Franco capital. Now, how much goes to each one of them? They are 2/3 and 1/3.
So 5,000 and 2,500.
So Evans is gonna have to eat 5,000 of that. And Franco will eat the remaining 2,500. Do what now? Times the 7,500. So your bonus is 7,500.
So basically, because they're paying off.
Because see up here, he's paying 40. He is getting 47.5, so that's his bonus. So the bonus is 7,500. Yeah, they're essentially paying out of their pocket. I mean, it's not cash really, but they're giving him that stake in the business. So you'll multiply that by 2/3 for Evans and 1/3 for Franco. That makes sense. All right, moving on. All right, y'all look at the next one and work it on your own. See how you do on it. See if you can get through it. I didn't fill in your blanks, but I mean, you can kind of go back and see what they're supposed to be. There's the first ones. You don't even have to use those charts if you don't want to. It doesn't matter. But remember, first figure out what your total equity will be, including that partner's contribution that's coming in. Multiply that by the percentage that new partner's going to get. And then compare that to what the new partner's paying. It's like 3 cents. I mean, I can, but that's not. So Holland, did you watch the class video? Did you watch any videos? Did you figure it out on your own?
What, for yesterday?
Yeah,
Yes, ma'am, I watched the video.
from the class
Yeah.
or the one
and,
that's in there?
It's honestly just like the format of the homework just kind of confuses me. 'Cause,
Yeah.
like, it's just so different than what we have in here. But
See, I
it's
try
just-
to word them like in a similar way to the
Yeah, I
homework.
tried to do it without putting it into like a chart that you had, and it just didn't work. And I put it in the chart and I figured it out.
Yeah, and even the answer in Cengage, like I can go to each one of y'all's, your particular homework and look, and it has an answer under there and how to solve it, and it's got that chart in there. So
So
that
yeah.
may just be the way you have to do it. There are shorter videos that I recorded for online, and it's the same, should be the same number, same examples. You'll see in the bottom of y'all's modules, there's say videos, and it's just one document or link or whatever. If you'll click on that, there's links inside that to videos for every, I did one video per example, so they're not super long if you don't, if you can't tolerate watching the whole class.
No, I just went through whatever I needed.
And I try not to make them too long because it's miserable.
Which is
What's
52
worse?
minutes.
What's worse is the ones I do online, you have to put captions on, like closed captions. Editing the
Whoa.
captions because it doesn't understand me. That's fun. All right, y'all done? Or are you still working?
Oh, I was doing the next one.
Okay, go for it. Yeah, keep working. If you want to work on the next one, go for it. I know you don't want to, but keep working.
It is
Move on to the next one. Because I say you work this one too. Bear in mind on that next one on page 19, and that one you do have to do an adjustment for a change in value on the equipment. You do that first, you allocate it to the existing partners. So when you do step one in the second part, remember to add that adjustment to your capital that they give you. Make sure you working the next one or you working this one? Okay. I don't want to get ahead of you. But just think about it. You can fast forward through that thing where you're not sitting in class for 15 minutes.
Yeah, I do it at like 1/2 speed. It's funny.
Is that at half speed where I'm driving?
No, like,
Like you speed me up?
yeah, 1.5. So
1.5.
it was like 50 minutes yesterday, so it was only like 30, 35 minutes. It was pretty, when you're talking really fast. It's
A lot better.
Alrighty then.
But what are we doing to?
I mean, when I drink a bang, it just, that pace just fits better, you know what I mean? Like, my
Yeah.
brain's working at that speed. So.
Did I tell you that Jim took a bag of those espresso beans to work one time when he was at the FBI? And the guys, like, they were really good and they liked them, so they just kept, like, walking. Every time they walked by, they grabbed some. These are FBI agents. One of them walked up to me, he's like, I can see sound. He was, like, buzzing so bad that I think everything else was just kind of creeping. He was buzzing bad. It'll load you up quick. Makes my ear ring.
Where do you acquire these espresso beans?
In coffee shops,
Oh, okay.
like Cups has them. They may have them down out. I don't know. Cups, you can get a big sack of them. But again, pace yourself. All right. Y'all got this so far? Y'all got the same answer so far? Okay. Okay. y'all good on this one? Did you get that for you? Why do we do what? This one right here? Because the bonus went to the new partner. So that means that the original partners had to give up some capital. So when they have to give up that capital, you're going to debit it because that's how you decrease the capital. Debit. Make sense?
So basically what's happening is that cash amount is for the new person, that's what they're paying in.
Yeah.
But whatever interest they're getting, whatever amount they're getting, if it's more than that, then someone has to eat the loss.
Yeah, somebody has to eat it. And they're eating some to get this new partner. Okay, on the next one. You good? Everybody good? Flipping? Okay. It's crazy when it rains, even the Wi-Fi. It's disagreeable. Okay, so on this one, you have Old Town Family Clinic. It's a clinic with nurse practitioners. Anna Shields, Jonah Adams, they're nurse practitioners. They share profit and losses 2 to 3. So Jesse Newman, also a nurse practitioner, has been asked to join them. So prior to admitting Newman, the assets of the clinic were revalued to market value or current value. So the revaluation resulted in medical equipment being increased by $38,000. Okay, so prior to that, prior to the revaluation, Shields and Adams' capital balances are $160 and $216. So Newman purchased a 30% interest in Old Town Family Clinic for $240. So that is the purchase. Okay, so the first thing we got to do is a journal entry for the asset revaluation. Y'all remember what to do on that? 8 o'clock class just stared at me. At least y'all have one. Y'all remember what to do?
Not really, I mean,
So you have to
like,
debit
you'll
it.
look and look back and
equipment?
judge maybe.
Equipment?
Yes.
So you debit equipment
Mhm.
for the amount that it's.
And you debit it for the amount of the adjustment, not the new amount. Because if you debit for the new amount, you're just adding, you're like doubling the thing.
Do I have to write out medical equipment or is equipment acceptable?
I would take equipment. But to be correct, it says medical equipment. All right, so what do we do with this 38 grand?
We gotta put it in some people's accounts.
The capital of the partners, right? So we've got Shields capital, and we've got, who's the other one? Adams capital. Golly. You cannot, got to write in print on this thing. It's fine when I use dry erase. It's this thing that just kind of like slurs it all. All right, so how much does Shields get?
15.2.
That's right. Or they're eating 15 too. No, they're getting it. I'm sorry.
2/5 of 38.
Okay, so it's 2/5 and 3/5. Do y'all know where that's coming from?
Yep.
Y'all know how to get that? Okay, if you don't, speak. All right, and then 22.8, right?
Yep.
Okay, so now we've adjusted the medical equipment. So the next thing we're going to do is go into this bonus calculation. So we have to figure out how much our total equity is. Okay, so we started out with Shields has 160, Adams 216. But you got to add this entry we just made because it went to their capital account before Newman came in. So you've got to include that. So Shields has 160,000 plus this entry. And Adams has 216 plus the entry of 22.8. And then Newman is adding $240,000. So what will my total equity be?
$654.
$654,000. So how much of that is Newman going to get?
30%.
Newman's gonna get 30%. So we'll take this total equity number, multiply by 30%. And so what does that come out to be?
196.2.
So really, this one's the same as all the other ones we did. We just had the actual asset valuation entry to put in there. You have to consider that when you're adding up all the equity. So then we're going to compare what was paid to what was gotten. What was received, rather? 240 was paid, and he's getting, or she's getting, 196.2. So how much is the bonus?
43.8.
And it's going to the existing partners because Newman's paying more than the equity that's going to be bringing in. Good? Still writing? Are you writing this right here? Can you see it? I'm sorry? Yeah. Here? You get it? It needs traction or something. Oh, well, I just went and I need him to do that drop thing on the table, but his table is broken. So he just twists me like a pretzel and pops what'll pop.
I've been watching this guy on YouTube. His name's like Dr. Alex Tubio. And he has something called the Tubio lift, where he'll pull your entire spine and releases all the tension.
He is funny. Like, he cracks my neck and he'll get my neck and he'll go, okay, he'll tell me to do something with a hand or something, and I'll look over here and it's like,
well, the whole point is to
he's distracting me.
Yeah,
It's
he's
diversion.
special guard because your
It's like,
muscles
oh
move
my
as much
gosh.
as possible.
Feels so amazing. I love it. Okay, y'all got it all?
Because the whole point is that they're literally moving your muscles out of your.
Oh yeah, and I'm sitting there trying to help, so I need him to do that, but it's just kind of funny. It's like, oh my gosh. All right, so what are we going to debit cash for? How much cash?
240.
All right, what about Newman Capital? How much is that going to be?
196.2.
196.2. All right, so we need some credits. And that makes sense because the existing partner's the ones getting the bonus. So we'll say Shields Capital. And we'll say Adams Capital. Now, how much is Shields?
2/5.
Again, it's 2/5 and 3/5 of this bonus amount. And the bonus was how much? 43.8. So you have this bonus of 43.8. And you'll multiply it by 2/5 and 1/5. 3/5 to get the answer on that. So you've got 17,520 for Shields. And you've got 26,280.
Yes.
So we'll say 43.8 times 3/5 equals 26,280. In case you go back and you can't figure out where that came from. All right, so on the next part, you've got the same initial parts of the problem, except now he's buying a 25% interest, or he or she, for 130. So we're going to change that up a little bit. So Shields and Adams still, their equity will still be the same. You'll change what Newman's contribution amount is.
That's the first one.
No.
I'm gonna put like a hidden speaker or something back there to see what y'all giggle about on it.
That's the first one, or we got to add
Do it now.
that's the first one, or we got to add the.
Well, you're gonna go through the same process in the beginning. You're gonna take. We don't have to actually journalize the adjustment, but you have to consider it. So this will be again 160 plus 15.2. So this will be the same.
Yeah, but we don't have to add that.
No,
Okay, yeah.
this is a completely different scenario. You will have I think you got a problem like this in your homework. So we have two scenarios. What if we let him have such and such for 240 or 25 for 130? You know, they're looking at different scenarios. No, you're not adding the top part.
And they just want you to see like what it's like.
Yeah, they're just
bonus versus-
yeah, they're looking at different hypotheticals. You know, like what if we do this or what if we do this? And,
Well, they're trying to show you like what happens if he gets the bonus versus the part that they
Right.
bonus. And you
so,
read
yeah,
about it.
exactly. So it's like he would get the bonus in this case, they would get the bonus in this case. You know, yeah, exactly. So you 175 2. I don't even think I touched it. 175 2, 238 8, and then Newman's contribution on this one's going to be 130 instead of that 240. It's just a different
So 5.
different angle.
544 is the total.
544, right?
Also, it's, unless I did it.
Wow.
Yeah.
No, I was looking at something else. All right, so your total equity in this one is 544. Yeah, it's taking the same information and saying if they sold this for this, they would have the bonus. If you flip it around and do it this way, it's just showing you different outcomes. You got all that to that point? So Newman paid 130. Newman received 136. So Newman is getting a bonus of 6. Oh, I'll take this off. Group text messages drive me nuts. I have to put my phone on silent because like my friends I just can't stand it. I have enough trouble focusing without my phone dinging constantly.
We just send names.
Hmm?
We just send names out.
What did that say? All right,
I
so
think we've had like conversations with our people at once.
let's
What the last thing said?
this.
We need to do the.
It just popped. I'm sit here just make it pop. I hate that. Oh,
No, it's not gonna last very long.
no.
So that's it. Hey, really, it's not gonna last very long.
Hey, that's my daughter that keeps walking in and out. I don't know if she's ever been in here with y'all. Somebody, one of her friends, they had a wreck last night and he just died. I'm
probably the wrong person to tell that. I like dark humor too. I mean, you know, like I would,
There is a comedian that does dark. You know what I'm talking about? He does dark humor. I know you've listened to him because it's one of those kind of things. You listen to him, and you're thinking, you kind of chuckle and you're thinking, I shouldn't be laughing at that.
I'm thinking of Daniel Sloss. Who are you thinking of?
That may be him.
He's Scottish.
No, I don't know.
No, that's the guy I'm thinking of. I watch him on Netflix, but I also listen to him like.
I'll have to look it up. I'll have to look it up.
Yeah, he's got a couple shows on Netflix, and he's
I don't think he's.
he's dark.
I don't think he's foreign. But I think he's American, but he is dark. And I mean, some of his stuff, I'm like, oh, come on, you probably shouldn't have gone there. And then other things, I'll giggle when I'm thinking back, I should be like that.
There are lines. I would never bring up like horrible tragedies necessarily.
Well, he
Like,
makes
especially,
dead
like,
baby jokes and stuff like that. I'm like, you probably
I mean,
shouldn't.
I think like
Probably
more
make the dead
personal,
babies.
like life, like stuff that's happened in your own life. And you
Oh,
make
yeah.
dark jokes. I think it's funny. Like I think that's what he does, and that's why I like him more.
Oh, yeah.
He'll also make fun of religion and stuff like that, but not like in a bad way. Just more like kind of poking up a little bit. Which I respect. I'm not a big religious person.
It just depends on where they go. All right, so this one, it turns out that Newman gets the bonus. I'm on the wrong one, sorry. I know something doesn't look right here. This is where Newman's paying 130. So Newman's gonna get 136 in equity, and that $6,000 bonus, the other two partners will have to absorb. So we've got Shields absorbing 2,400 and Adams taking the rest of it. All right. Make sense?
Yes.
Okay. We're going to move to the next part on liquidating partnerships. Y'all change that to part 5 because I numbered it wrong. Or I just didn't change it. I didn't see that. All right. This is going to keep you from having to read. So,
Oh, good.
yes. Well, I mean, I don't know. Some of that stuff, it is hard to read. All right. So liquidating or liquidation of a partnership means they're closing down. They're shutting down their business. So the liquidating word means they're paying their debts, but it also includes the whole, they call it a winding up process. It's like wrapping things up, paying off your debts, selling everything, divvying up the cash. So it takes place when the partnership operations, I'm still writing that down up there? No. You got the entry? Okay. This is done when the partnership is shutting down. It's not like a partner retires or somebody dies or somebody new's getting in and it's changing up. This is, they're done. So the accounts have to be adjusted and closed. So at the end, when you're recording the winding up process, you'll have assets, contra assets, liabilities, and owner's equity. You'll see. And then I thought that's kind of the contra asset thing was kind of weird. We don't really use that in any of our examples, but that's what the book says. So the steps in the whole liquidation process. First thing they're going to do is sell the assets. That's called realization. So y'all, these things are like, these are multiple choice questions.
It just cracks me up.
What? Realization?
Realization. Oh man, that's.
Yeah.
I done do.
Well, some of the terms are kind of strange, but
you just come to a sudden realization that
now we suck.
you made
We're
a bad
closing down.
choice.
All right, so the gain or loss from selling the assets, I mean, they could make money on them, they could, lose money selling the assets. But regardless, whatever they make or lose, they're gonna allocate to the partners using the income sharing ratio, which makes sense because gains and losses are a type of income. So keep that in mind because we're gonna have something else here in a minute and it gets confusing. So they're going to take the money that they get from selling the assets and any money they have left, and they're going to pay all their bills off. They're going to pay all the debts. Okay, so any cash that's left over, they're going to give to the partners based on their capital balances. They're not going to use the income sharing ratio to distribute cash, because if they do that, it's going to be, the goal of this whole thing is to zero out all of the accounts. There should be no balances left at the end of the day. If they use the income sharing ratio, you're not going to zero out the capital balances. So they're going to pay them based on what their equity is left in the business. All right, so then there's a statement of partnership liquidation, and it summarizes the whole process. If you end up with a partner having like a debit balance, that's not good. There's supposed to be credit. That's called a deficit. And it's created when the loss on selling those assets is more than what the partner has in their account. So what happens when you have a deficit in a partner's account? They're supposed to put money back into the business to cover that shortfall. They may or they may not. They may not be able to. So the deficient partner is responsible to pay that partnership that amount that they're in the hole. If that partner does not pay or cannot pay, then the remaining partners kind of have to eat that difference. And that will be split out based on the income sharing ratio, because it's considered a loss to the partnership. There's also a statement of partnership equity. It's just like the statement of ownership equity we used to do. It shows, it reports the changes in the partner's capital accounts. And it's the same thing as we did in accounting 1. I mean, capital additions, that's owner investments. Net income or loss and withdrawals. Same things change partners' accounts that change an owner's account.
It's just a problem.
Huh?
It's just all the problems after this, right?
It is, and we'll probably just do those on Tuesday. But
And then review.
yeah, if we have time, we'll review. I'm gonna give you the problems Tuesday for you to work, as review, but I don't know if we'll have time to do them in here or not. We can start. Or we can keep going for 15 minutes and it'll give us more time on Tuesday to go through the review problems.
Yeah.
All right, so
One of mine too.
forget about the financial analysis part because we're gonna have a whole chapter on that you're gonna do, so just don't worry about that right now.
Oh.
There's your recap. And then we've got steps in the process that we will do Tuesday. Be prepared to take your test on Thursday.
Are you
Yay.
gonna have a food?
You'll have one, yeah, definitely. Is that good or bad?
We're gonna have a food paper?
Yes.
Ah.